Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsipras. The encounter with the weekly midterm trend support level at 2537.92 significantly impacted the market. Bullish players leveraged the strength of the weekly Kijun line to nearly erase the losses incurred over the prior 2 weeks. This development raises the possibility of reversing the recently formed daily Ichimoku death cross at 2692.84. If bulls maintain their momentum and effectiveness, the psychological level of 2750, 2800, 2850 and 2900 and the all-time high of 2789.48 may become achievable targets. However, should the bulls lose steam or pause, the supports of the daily Ichimoku death cross, currently positioned at 2692.84, 2662.95, and 2633.06 could come into play. Additionally, the weekly short-term trend 2662.95, which shifted from resistance to support at the end of the last week, now strengthens these Ichimoku levels. On lower timeframes, gold's activity has foiled a sustained uptrend. Bulls breached the H4 Ichimoku cloud throughout this upward momentum and established a bullish target. Consequently, the bullish targets on lower timeframes, represented by the resistances of the classic pivot points, now include the H4 target levels of 2727 and 2749. The most critical level on the lower timeframes is around 2640. It's a weekly long-term trend. This level, along with the classic pivot point supports, will bolster gold in a corrective decline. However, a breakthrough and reversal of the trend at 2640 would shift the balance of power in favor of bearish players. For intraday movements, the supports and resistances of classic pivot points serve as a key references. Their positioning updates daily, with new values becoming available shortly after the market opens. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. On Friday, the British pound sharply dropped and reached the target support level of 1.2510. On the daily chart, a convergence has formed between the price and the oscillator. We anticipate a correction, if not to the entire decline since September 26, then at least to the movement from November 6. The minimum correction could target the 1.2708. A second strong level appears at the June high of 1.2859, with 2773 acting as an intermediate level. However, a decisive upward movement is unlikely today, as the price has yet to close the gap from this session's opening. On the 4-hour chart, the price is moving within the range of 1.2510 1.2612. A reversal toward closing the gap will likely occur either at the 1.2612 resistance level or slightly higher at the MACD line. It's a blue line on the graphic. That's all for today. Wish you best of luck.